Tesla CEO Elon Musk has sold another tranche of stock in the electric vehicle and battery maker, raising $963 million. Mr. Musk exercised share options over 2.17 million shares, which suggests that he has more stock to sell in due course. And proving himself to be the king of banter, Musk tweeted on Friday that he was considering giving up his day jobs to become a full-time influencer and asked his followers for their opinion. Elsewhere, data showed that Tesla has sold just under 53,000 vehicles that were made exclusively in China during November, representing a growth rate of 144% month-on-month, according to research from the China Passenger Car Association. Airbnb rallied strongly last week, largely thanks to indications that 3 doses of COVID vaccines will reduce the chances of catching or falling ill with the Omicron variant. Airbnb has outperformed the wider travel and leisure sector over the last 3 months by a considerable margin, and although it competes against the major hotel and lodging chains for business, declining occupancy rates could mean that people are traveling and staying away less. TSA data suggests airport security footfall is getting back toward its 2019 levels, but that didn't stop Airbnb's chief accounting officer, David Bernstein, from exercising share options and selling Airbnb stock. There was some much-needed respite for Alibaba's share price last week, as reports suggest that the firm is winning market share in cloud computing at the expense of Huawei and Tencent. Alibaba is, however, reported to have missed out on a chance to acquire Tsinghua Unigroup, a Chinese-based chip manufacturer. Alibaba had hoped to merge Unigroup into its own fledgling chip manufacturing operations. Square, which will soon change its name to Block, was on the receiving end of some negative comments from investment bank Jefferies, who lowered their Q4 performance forecasts based on what they believe is slowing growth at the company's Cash App. That said, the bank thinks that the bad news is largely out in the open now and that there are better times ahead in 2022. As a result, it kept its buy recommendation and $240 price target on the stock. Microsoft may look likely to lose out to Apple in the quest to become the world's first $3 trillion company, but it does look set to win full approval from Europe competition authorities for its $16 billion takeover of Nuance Communications. The company is also said to be talking to UK authorities with a view to winning their approval for the purchase of the artificial intelligence and speech recognition specialist. However, the UK regulator, the CMA, has now said it wants to know more about the deal, which it believes could reduce competition in UK markets, and it will now investigate the transaction.